My name is Richard Harmon. I'm the Vice President Global Head of Financial Services at Red Hat. And today I want to share sort of things I see across our customer base globally around AI, particularly with respect to capital markets. Um, One thing I found very interesting in the capital market space is that um, you know it's typically an area where there's a lot of cutting edge innovation in the analytics space. Um, but I see in the AI side, because of the concerns around customer interactions and a lot of other things, using AI for market managing of risk and evaluation of risk and pricing assets is in many ways, contrary to most opinions or what you would think, is a good area to really experiment with AI, particularly in areas like agentic AI. So I'll share a little of that. But before I do that, I think it's worth, from my perspective, I'm in Red Hat for 5 years, and I'm a passionate, like all Red Hatters, passionate about open source. But the piece that I think is really telling about Red Hat as an institution is our focus on enterprise grade platforms, highly resilient, highly performant, and highly secure. And when you go back to our history 30 plus years ago with Red Hat Linux, Enterprise Linux, to other platforms like Ansible, the automation platform, OpenShift, our hybrid multi-cloud sort of containerized platform, and to OpenShift AI, which is now the extension of that into an enterprise-grade AI platform. That historic lineage of focusing on resiliency, enterprise-grade capabilities, simplification, and security is really, really the lineage of Red Hat, and it's continuing in the AI space. So I'm particularly excited about what Red Hat can do for our customers in the AI space. So let me move a little in terms of some examples and what I see. So obviously last year, there was a lot of talk about agentic AI, having agents and things like that. So there was a lot of experimentation. There's still a tremendous amount of development coming out of the open source community around how these agents can be managed. But there's an area of history around AI and agents which goes back into the simulation world, which is agent-based model simulations. This comes out of the physics environment and goes back for 30, 40 years. That's a space I've spent some time in my years, at JP Morgan and others. And that is sort of the preliminary, in my view, preliminary aspect of what agentic AI can be, because it's not only about automating and streamlining and making systems autonomous and self-healing and self-deciding, sort of intelligent automation, but in the capital markets or modeling space or in risk spaces, with sort of agent-based modeling, it's about bringing more robust ways of evaluating movements in the market in terms of risks. So you're managing feedback effects. You're looking at spillover effects in terms of systemic risks that the market can be exposed to, as well as pricing assets. So that to me is a really, really exciting, very innovative area. It's a cutting edge area. And this is actually where I'm seeing agentic AI being started to be used and actively engaged in, even in the trading desk or in a risk group. One good example, and you'll see the paper link below, is what Barclays has done with an ecosystem partner we have called Simidyne, which does AI-enabled simulation models, particularly agent-based models. And what they have done, and the paper is sort of basically looking at agentic AI trading. So they have agents that act as analysts that facilitate a lot of collection of information, analysis information, but they even have agents that try to evaluate the stochastic price process of an asset. This is what quants would do, and they could, many years of education, PhDs, and brilliant people. These are the rocket scientists we talk about in capital markets. They develop these very sophisticated mathematical models. Now, Barclays has shown that LLMs are able to actually replicate this behavior in a very, very robust way at a fraction of the time it's taken humans to do, right? So if you think of the potential of something along that lines, now you see where capital markets firms are getting excited. But more importantly, not just about very sophisticated stochastic modeling, but more importantly is about the sort of the analyst role of pulling information from the marketplace, from news feeds, from all kinds of documents, to contextual information to evaluate different, whether it's equities, it's bonds, it's foreign exchange markets. This gives the amount of information sources embedded into doing analysis and evaluating risk exposures. It brings it to another degree, and it brings it into a real time level. And I think that combination is really, really powerful. So anyway, so I see this as like hints of the future. I think you should definitely look at this paper and others that people are doing around the globe. All of that said, ultimately, all of this has to go in an enterprise, highly resilient platform. And this is ultimately about governance, controls, transparency, explainability. These are the things that Red Hat and many other open source entities are building for the global community so that you can manage all of these very sophisticated workloads, analytic tools in a very, very secure way. And you have agents that have guidelines and guardrails that are controlled. You might even have agents monitoring other agents to ensure that there's nothing wrong going on. Anyway, so 26 is going to be an incredibly fantastic year. I'm super excited about what the global capital markets community is going to do with these kinds of tools and capabilities. And I think this year will be just the tip of the iceberg, where in the next 2-3 years, we're going to see some significant advances. Anyway, those are sort of my quick thoughts on where capital markets is moving with respect to agentic AI. And I welcome any feedback or thoughts you have. I'd love to always hear from customers as well as partners on what you see that's people are really doing that's innovative and interesting. Thank you very much.